Hello guys, I'm Paris the Obsessed Guy and welcome to today's video. And if we see today markets recovering from lower levels, and as I said that do not buy from lower levels, it will be better to not take a long position from lower levels. And yes, you must have missed this rally. I did try to take a put short position over here and I squared it off somewhere over here when I saw that the market. So I made a little bit of profit, not much, but again, this would have been a very complex trade and you might have hit your would have hit your stop loss or something if you would have tried to take a trade over here. However, I got a very small stop loss, so that's why I decided to go ahead and take a put short trade over here just to see what happens, right? Because if you see, markets broke this trend line over here, and then the markets recovered back again. So I thought maybe this might be a trap. Market might go up then start to come down again. So what can we do for tomorrow is going to be very simple. Now, one thing which is very interesting is that pros have started to build long positions again. They have not reduced their future short positions. If you see, they've actually added 943 contracts more. But in all other things, if you see, if you see call options, they've bought call option. They've basically squared off all of their call shorts. They've even made very good put short positions. So this is indicating that we might see again one more up move on the upside, at least till 53,000. And for Nifty, we might also see 24,000. Nifty might try to go about 24,200 also. Now, as I said that at this point, the major part of the rally I think is done. There is not a big, a very big, you can say move that is left on the upside. Maybe market might continue to move. So if we are taking a bullish trade on the upside, then we will think about not going very aggressive. Keep that in mind. We will not go very aggressive at this point in terms of buying, because market has already gone up at higher levels. Now either the market can see some profit booking and then we might go aggressive, but as of now on the buying side, not going aggressive will be a better thing to do. So what can we do for tomorrow? Very simple. 24,080 to 24,100, this area. If this Nifty is holding this area and it starts to make positive price action, you guys can go ahead and take a bullish trade from here. Your first target can be small till 24,150, where this resistance is. If Nifty breaks this resistance, then you can keep a target of 24,190 also on the upside, because the data that has come today has come pretty bullish. So you have to ask yourself, why is the data so bullish, and why have have FIs held 350,000 long contracts? Now we don't look at FIs because they sometimes make those delta neutral strategies. So our major point is pros, right? Whatever the pros do, that is the most important. And pros have again gone into long, and clients are still in very big short position. So maybe Nifty and Bank Nifty might be giving one more rally on the upside, which can exhaust all of these guys to leave their short positions, and then we might see again a sell off from the top. So for tomorrow, very simple, 24,080 to 24,100. In this area, if the market comes and if the market starts to make positive price action, any sort of positive price action, a double bottom, any higher high that the market makes, you guys can go ahead and take a bullish trade from here. Again, 24,150 and 24,200 on the upside. These will be our two targets. Either keep your stop loss very tight or take less quantity, right? That is up to you. Whichever you feel like is a better thing to do, depending on the capital that you're using, or depending on what you're trying to do, or how big of a stop loss you get in the live market. Try to do either of these two things. Either keep your quantity less or keep your stop loss very tight if you're keep taking the normal quantity. So that is for Nifty. If we open with a gap up, let's say somewhere near 24,200, then again the major level to watch out for will be 24,100 to 24,080. Until unless 24,080 is being held, we cannot take a short position very aggressively. If 24,080 is breaking and we are seeing negative price action being made below this level, then we will go ahead and take a short position with a target of 24,000 on the downside. That will be our first target, and then we can also keep bigger targets if Nifty sustains and closes below 24,000 on the downside, easily till 23,800 to 850 also on the downside. So I hope the plan for Nifty is very clear. If we open with a gap down, let's say below 24,080, then we want a little bit of pullback in the market till 24,080, right? Again, 24,080 to 24,100. At this point, if we see that the market starts to make negative price action, then we can think about taking a short position again. However, one more thing is that market, if we open with a gap down, market might not give you a very big pullback. Why do I say so? Is because market is at the top. Now, if we open with a gap down, a lot of these people who have taken long positions, even pros, they will once try to exit at the opening itself, right? They might try to exit with a, maybe with a, you can say a cost to cost, on a cost to cost basis, because they have taken long positions all the way in, in today's rally. So they might be, their average price might be somewhere near over here also, right? And if they, again, if you open with a gap down, they might think about taking an exit over here itself with a very small loss, because they don't have a very big loss over here, right? So if we open with the gap down, and if we are even sustaining below 24,050, and when we start to make negative price action, you guys can go ahead and take a short position even over here. Market might not give you a very big pullback tomorrow if you open with a gap down. So I hope that is very clear. Now talking about Bank Nifty. Now Bank Nifty is at a very interesting position, and the best place to take a short position is this zone. Why do I say so? Is because of two things. First of all, this zone will act as a resistance, that is fine, but then we have this trend line also coming over here, which Bank Nifty will take a resistance from. So any sort of rejection that you see near 50 to 700, you can think about taking a short position over here with a good quantity, and because you will have a very small stop loss, you can easily give a stop loss of 50 to 730 over here or 740, and as soon as you see rejection, let's say somewhere near 660, market goes up till 700 or 710, comes back down till 660, 670, you can think about taking a short position over there. You will get a very small stop loss, and then you can keep easily a target of 52,400 first of all on the downside, and then 52,100 also very easily on the downside. So the major level to watch out for tomorrow will be 52,700. If we are sustaining above 52,700, if we break 52,700 after, let's say, opening flat and breaking this, then if we are coming back down near this trend line, and then you see market making positive price action, only then go ahead and take a bullish trade, because what the market might do is break this trend line, show everyone that a buying is coming, and then the market may give a fake breakout also from this trend line, then the market can again come back down. If that also happens, if the market gives a fake breakout from this trend line and then comes back down, we can again take a short position over here, because then also we will see a very fast selling. Why? Because whenever there is a fake breakout, market gives a very fast move on the downside from wherever it has broken out, right? So keep that in mind. Only if you see that the market is coming back near the zone and it has started to make positive price action, we will go ahead and take a bullish trade from here. Our targets will be 52,950 on the upside. Don't keep the exact target of 53,000. I've always said that, and please keep that in mind, right? So I hope that is very clear. Now on the downside, 52,400, the important level. If the market, let's say, you take a short position over here and market comes near 52,400, if the market is holding 52,400 to 52,350, the same zone that we've been talking about since this point over here, same zone again. This zone, if it is held, then market can again take support from here and then start to move up till 53,000. So if the market is holding 52,400 to 350, you can think about taking a bullish position. Let's say market opens flats, comes down straight up near the zone, and then starts to move up and goes up, right? So if that happens, if the market doesn't go up but rather moves down first and then it is holding this zone, then you can think about taking a bullish position from there with any sort of you can say a bullish confirmation that you get. Maybe it is a double bottom pattern in 3-minute chart, 1-minute chart, whatever you feel like. Maybe it is a higher high pattern. Any sort of pattern, bullish pattern that you see being made over here, you can think about taking a bullish position from here. First target 52,650 on the upside. That will be a small target. If this zone is broken, then you can easily keep 52,950 to 900 also on the upside. Not a problem at all, right? So major level 52,400 is the level which we will watch out for. If this level is not being broken, then we will think about taking a bullish position in the market, right? However, if this level is broken very violently after opening flat, market comes and breaks this level in one go itself, then if we, let's say, go down till 52,320, 300, all these levels, then we'll wait for one pullback on the upside. Either it can come in 3-minute chart, 1-minute chart, anything, just one pullback, any sort of one small green candle being made, and if the market is again breaking the low, then we can again think about taking a short position from that level with a target of 52,100 on the downside again, right? So I hope that is very clear. But yes, the best thing would be if we open with a flat, if we open flat and go up near this trend line, we can think about for once taking a short position. Yes, the data is pretty bullish, but this data can also change pretty fast in the live market. Please keep that in mind. This data is not like very big data. Pros have 193 long positions, sure, but most of those positions are in call longs and put shorts. Keep that in mind. And these positions, these put and call positions, are pretty easy to you can say work around, because calls and puts have a lot of volume as compared to futures, right? So they are still short in futures. Keep that in mind, right? So I mean, why would they be short? Now, one thing that can happen is that they might use futures as an hedge to take long positions in calls and put shorts, right? So that can happen, sure. So we'll need to see how the data turns out in the next few days, but still we will work on price action at this point. Right now, data cannot be trusted a lot. Yes, sure, we can take cues from the data, but data cannot be completely trusted at this point, because this is a type place where the market can trap a lot of people either on the upside or on the downside. So yeah guys, I hope that is very clear. Again, if your stop loss gets hit for 1 or 2 days, that is fine. This is a volatile market that we are saying, so the market will try to take at least 1 or 2 stop losses, will try to make you a bit clueless about where it is trying to go. But still, all we need to do is manage our risk at the end of the day. It is fine if you hit a stop loss, it is fine if you miss a rally. If nifty even closes about 24,200 tomorrow, that is fine, because then we'll have again 300 points of the upside till 24,500, so we will catch that rally, right? So yeah guys, that was it for today, and thank you for watching till the end. I'll see you tomorrow in the video. Bye bye.